I'm on the hunt for the next company I want to add to my portfolio, and there are a few places better to look than in Pat Dorsey's portfolio. He's written a bunch of great books describing how to go about finding companies with durable competitive advantages. He seems like a mini Warren Buffett, and I really admire his approach. In this video, I want to talk about one of Dorsey's larger positions, which is WIX. I will be bouncing around going through all of the financials and doing my initial due diligence. Hopefully we uncover something interesting enough where we might take a deeper dive and potentially one day add this to the portfolio. Before we begin, let me know in the comments below if you've done any due diligence on WIX, if you've found any great write-ups or information that you have to share about this company. I'm all ears, and I'm sure everybody in the community would love to hear from you in the comments below. Okay, let's hop over to ticker and talk about this company WIX in the context of Pat Dorsey's portfolio first and foremost. So as with a lot of investment ideas, I usually like to look at these super investors who match my style. A lot of the companies in his portfolio I find very attractive, so this is a great place for me to start. So just briefly, there are 9 positions listed here for Dorsey's portfolio, and the number 3 position here, sitting just below Facebook and Smartsheet, is WIX. Now what's interesting about WIX is, well, in the most recent quarter, he actually added 35% to his position, and he owns 1.5% of this company. So I think he is pretty serious about thinking like an owner with this business. That and the mere fact that it's such a large position in his portfolio is a sort of double whammy of conviction for me. Anything above a 10% holding for bigger funds like this is pretty impressive. And in fact, if we hop over to Dataroma, we can pull up the holdings history for this company in Dorsey's portfolio. We can just do a quick search. As we can see, the earliest he purchased it was in 2018, and at the time it made up 8.24% of his portfolio. Now he's held it every quarter since, and it has slowly been either the number 2 or 3 position in his portfolio. So that's a really good sign. He's not dumping this stock and then picking it back up. I think he does have some buy and sell activity adding here and there, but this has been a mainstay of his portfolio since the end of 2018. All right, let's click through to WIX and try to get some information about this company. If you're not aware what WIX is, it's basically a no-code website builder. It is a software company, so right away we should be thinking this company better have really high margins and it better be gushing cash flow. One of my expectations is that it's going to be growing a lot, but it's not necessarily going to be reporting any earnings. Part of the trend with software businesses seems to be acquiring market share, sort of at all costs. But ideally, we're going to be seeing cash flow flowing through the cash flow statement, and they're just reinvesting those cash flows instead of just hemorrhaging money. But yeah, a little more detailed, company offers WIX Editor, a drag and drop visual development and website editing environment platform. They also have some other services such as a logo maker. They have payments, all sorts of individual features that make up this ability to basically easily and accessibly build a website. So if you're not a developer, then something like WIX or Squarespace is probably the first place you're going to look if you want to build a personal website or even a professional website. You can run businesses, you can do sales through these types of websites, so they're very robust, and you can get a long way without actually hiring a developer. This is something I didn't know about WIX, but makes a lot of sense. They have this app market where you can install free and paid applications. So this kind of sounds like what WordPress does, where they have a bunch of plugins for WordPress. You can either buy them or, they're free, and there are dedicated developers just building these WordPress plugins. And I wouldn't be surprised if WIX has a growing or a pretty established community of these types of developers. Okay, so Dorsey owned this company in the third quarter of 2018. So let's just say somewhere around $110 per share. And he has held it pretty steady as one of his largest holdings all the way till today. So he, of course, did not sell out during this peak price of a triple in the share price, which this may or may not have been a warranted price for the business. It seems like the market the general consensus is that no, it was not worth that much. But of course, we know the market is fickle and prices fluctuate wildly without any concern for the underlying business. But to be able to hold this company through thick and thin, as the business dipped below his purchase price and then meteorically shot up during 2020, during the coronavirus pandemic, shows that Dorsey does have a stomach of steel and conviction of steel. But his addition in the latest quarter shows me that he astutely, hopefully, has purchased it as the share price has slowly declined. So he's accumulating above his initial entry point. He's still adding in pretty big chunks, so it makes me think that he's adding at a price that is both attractive and will appreciate into the future. WIX isn't a massive company, but it is fairly large. It's a little over $8 billion in market cap. So over on the WIX website, it seems pretty straightforward. You can get started with no credit cards and no payment. You could start to build an online shop if you have a business idea, or for instance, I'm considering WIX to build a personal site for myself and for this YouTube channel. This is an example of a website that you could easily build with WIX templates that they provide for you. This looks as professional as any website that you might encounter. Really, if you don't need any complex database management or anything like that, then WIX is going to be a great option. One thing that's pretty interesting about WIX is, and this applies to all the other free website creators such as Squarespace, but they allow you to start building your website without paying for anything. So this is one of the sneaky bits of sort of a switching cost idea that they've embedded as a free feature. So you go and start to build your entire website. You've gone through all the effort. And then at that point, once you've put in the effort, you're much more likely to actually pay for the ongoing service that you need to continue to run this website. So it's a win-win. You don't need to pay up front as a consumer, and you're much more likely to convert as a customer once you've built your website for WIX. And the pricing doesn't seem to be too egregious either. For example, for a basic website, it's $15 a month for a personal website. You can hop on over to the business and e-commerce plan. So if you do need to run sort of a store outside of your WIX account, basic businesses where you can accept online payments, all the piping is here for you, $23 a month. That seems like a very reasonable business expense. So again, I'm trying to hammer home that WIX seems like a very affordable and accessible option for probably 95% of users out there looking to build an online e-commerce business. The great thing about WIX's business model so far, that from what I can tell, is it's an unpleasant thing to, once you have built your website, to switch it to some other platform. Unless there is something grossly inadequate about WIX, or the features and differentiators of another product are so great that you actually feel compelled to switch to another provider, say Squarespace, it's very unlikely that WIX is going to lose their business due to anything like that. Switching costs are very high for these software types of businesses. The last thing on a business owner's mind is, I want to save $2 a month, and I might actually have to take my website down for a day or two. And at that point, I wouldn't be able to process any sales. It's just bad news for the customer. So it's unlikely to happen. So that's the good side of part of WIX's business model. However, I would say that on the outset, if you're choosing between a company like WIX or Squarespace, I don't have the answer to why someone would choose WIX over Squarespace, or even a platform like Ghost. That's something that'll have to be discovered through either a discussion with customers or a deeper dive into management's transcripts. All right, let's hop over to the financials. First thing I'm going to check is, of course, the balance sheet. The one thing I don't want to see here is a lot of debt. So let's see, the net debt position here is negative almost $700 million. So that's a good sign. It means they have a ton of cash on hand. Hopefully the company is looking for different avenues to continue to deploy that cash, or at least return it to the shareholders at the very least. Because from my standpoint, WIX is probably still in the stage of growth where it's would behoove them to continue to reinvest in the business. The cash and short-term investments position has been fluctuating a little bit. As you can see, the massive gain in these short-term investments. I'd be very curious to see what that is, if it's comprised of bonds or individual equities. I'm not sure. The cash has fluctuated a little more, up, down, way up, a little down, more down, way back up again. So as you can see, the business is generating a lot of cash. The question is, are they able to redeploy that at attractive rates of return? The value of this goodwill is sort of indicating that they might have had some acquisitions, not too egregious in the prices, but we definitely want to look into that further. In this other intangibles, it has grown substantially, and something labeled other intangibles that's worth $90 million on the balance sheet is potentially a red flag. So digging into the 10K will hopefully provide more information about what this actually means. They've got $1 billion in debt, but they can easily service that with the cash and short-term investments on hand. All right, let's hop over to Morningstar. I especially like to analyze Pat Dorsey stocks on Morningstar because he used to be the head of, Director of Stock Analysis at Morningstar. So let's pay homage to him here. All right, we can hop into the key ratios. This is by far my favorite page. It reveals a lot about the business at a quick glance. All right, so revenues, we definitely want to see these growing. And I would say that this is a very attractive exponential growth rate for this company, for the revenues. It's really hard to fake revenue compared to earnings. And the revenue coupled with the gross margin, which, as we can see, has been hovering around the 80s to the mid 80s historically and is slightly decreasing. We'd want to take a deeper look into the cost of goods sold, what's going on there, to figure out why the margins have been pretty steadily declining since 2018. As I said, the profitability of this company based on net income is not going to be impressive. They are still losing money. Take a look at the shares outstanding. I would expect that, they're slightly diluting, but it doesn't seem to be too egregious just looking at the base share numbers. With software companies, I wouldn't be surprised to see some dilution due to stock-based compensation or stock options being triggered. So not too worrying there. So the capital expenditure here, in the early days, they did not have much to spend on. It is slowly increasing, which, depending on what those investments are, which of course I don't know at this point, that's a good or a bad thing. With an asset-light business, it's usually a good thing when the capital expenditure either stays steady or decreases over time. You shouldn't need to plow so much money back into physical assets in order to continue to grow the business and expand margins. But it is a part of growth, so we will definitely want to figure out what's going on there. The most important part is the free cash flow that we've seen being generated over the course of the years. In the early years, they of course were losing quite a bit of money. Now they are free cash flow positive. So they had the top year in 2020, and to this year, they are still continuing to generate free cash flow, which is really what matters. What they do with that cash flow is of utmost importance. Are they reinvesting it into more developers to build more features? Are they going to distribute those cash flows or plow it back into some other facet of the business to grow it? Over time, as the business matures, we definitely want to see net income and free cash flow sort of converge. But at the same time, if a business is still growing, I think that this is an acceptable state to continue to look at the business. Dorsey is the only super investor listed on Dataroma that is invested in WIX. Software is usually not the type of company that will show up in a lot of the current value investors' portfolios. However, I believe that the trend going into the future is that a lot more of these businesses, out of necessity, will have to show up in these portfolios. But if we really want to have an understanding about how to value and wrap our heads around these software businesses, then I think Dorsey is the man to follow. Overall, I'm pretty excited about this company. Based on traditional value metrics, it does not appear to be a screaming buy. The company is selling for a price to sales of 6.8, which does seem to be pretty expensive. I'm still learning how to think about these businesses that have tons of growing revenue, tons of growing free cash flow, but no real earnings. So I think WIX is a good opportunity to try to fine tune those skills. But so far, I think WIX warrants a deeper look. My next steps for this company would be to pull up the latest annual report, probably read through that and read through the latest couple of filings for management, get to know how they're discussing the business with the shareholders and things like that. One of the important factors to wrap your head around valuing a company like this would be to really understand the free cash flow growth rates that are expected going into the future. Now, I'm sure Dorsey has his head around that. That's something that I would need to spend a lot more time with the business to have any confidence projecting. Now, I did look for write-ups on Value Investors Club for WIX, and to nobody's surprise, there wasn't a write-up there. But again, let me know in the comments below if you have any really valuable information that we can share to others that are interested in understanding more about WIX. A few questions that I have going into more research would be, what's WIX's market share in the business, and are they gaining market share? Are they losing market share? How much money do they need to spend to acquire new customers, and what's the lifetime value of each of those customers? Basically, do they have a wide moat? Now, switching costs is a form of a moat. They might also have a slight moat with their brand, but I don't want to call this business a commodity business in the software industry, because it's not quite that, but there are substitutes that are probably acceptable for consumers. There's no telling if I'm going to end up investing in this company, but it's a really good exercise in trying to figure out why we would pay money at all for a company that is not earning anything. Again, the free cash flow makes it evident that this company is generating cash, and it could turn off the investment faucet and report earnings. So we'll see what happens there. And with the share price continuing to decline back to Dorsey's initial investment price, it makes this a lot more attractive and maybe something that I could fit into my portfolio. If you like this video, you might enjoy some videos over here where I talk about more of Pat Dorsey's investment positions. Thank you for watching this all the way to the end. I really appreciate you sticking this one out, and I thank you so much for your time, and I will see you in the next video.